as we learn more, we try to share more. I know it's easy to stay where you are, stay in your, what's comfortable, but there's a lot of information that you could freely learn that you could not get in the 90s. You couldn't get it, couldn't get access to it. So if you want to be better, school's in, got to learn. But I do want to touch on the conversation we were talking about, and that Corey just mentioned about what I found. I don't know, they may have verified it today, but what I found is that the only minority controlled public company, meaning that its stock trades on the stock market, the New York Stock Exchange, most, I think, not NASDAQ, is Radio One. Last time I looked, it was $13 a share. Well, guess what? When we talk about access to capital, the stock exchange is the biggest capital market. The American stock exchange is the biggest capital market in the country, obviously. And it's interesting. All of these millionaires, billionaires, all this stuff. There's no more black companies in the capital markets. I mean, there's a reason why, and it has to do with. It has to do with which a lot. I mean, it takes a lot to become a publicly traded company, but that bothers me, man. Like, it really does bother me. I'm like, wait a minute. So we have we have instances of individual success. We show even some gentlemen are owning sports teams and things like that. But man, and I'm not talking about entering the market and becoming Google or Apple. There's a lot of companies in the stock exchange. There's a lot of them. A lot of them you don't even know. Like they do all types of things. And so I don't have that verified. I'm going to try to check more information, but that's mind-boggling to me. Like, wow, we don't have a minority. We have very few minority, if one or two minority-controlled companies, black-controlled companies, trade on the stock market. Wow. I mean, that's yeah. When I think about that, it just throws me off, and it's kind of a forward thought, because it's saying that we get all this stuff. We talk about capital markets. We're talking about access to equity. Well, one of the biggest accesses to equity is the stock market, underwritten by Goldman Sachs. All these guys are turning hedge fund managers, things like that. But guess what? You have to have a certain level of company to do it. You have to be organized a certain way. I know there are minority companies that have a lot of government contracts. I mean, you have the revenue level, but it's just really interesting to me that, wow, because that's the cash out. That's a method of cash out. When people start companies, and often venture capital comes in, the goal is to become public, because now their shares are going to be worth more. If you have 10,000 shares of a company that you grinding on your own, you're making, you're trying to survive, then the company goes to the stock market. The company gets cash for for the people that underwrote it, because you have to have an investment bank to underwrite it, who will hereby release, send those shares out to, they'll put them in the market. And even if you give up some of your shares, now your shares has a objective valuation now that can go up. Because truthfully, when we own our own stuff privately, I mean, you value your shares on your own. I mean, you kind of say, I mean, there are accounting methods to do it, but it's value. No market is telling you. People are not necessarily, there could be, but they're not necessarily looking to put their investment, their retirement money into your shop or something. Um, so that's where those big institutions invest in the stock market. They invest in these companies. So now you the founder, you had 10,000 shares, they're going to blow it up. You're going to have a whole lot of shares when it's done. Might have 1 million shares. But all of a sudden, the initial public offering might be $50 a share. It wasn't worth $50 a share when you were private, tried to grind. But now's the cash out. Whatever you put in, if you got 1 million shares, you probably sell $100,000 share. And you made whole, 100,000 shares, and then you made whole to your investment that you put in there. $5.5 million. You're like, boom, I'm chilling. That's the capital market. That's how all these not all, but many people are very wealthy in this country off of that, hedge funds and things like that. So that's the capital market where all these gazillionaires are coming from, and and they build well. But guess what? It's not a lottery. It's not going to happen in 2 years. So the fact that there are so few, as I say, to my knowledge, publicly traded companies that are minority owned or minority controlled is interesting. It's very interesting. Somebody needs to look into that. Maybe me, maybe somebody else. But taking a step back, we'll get to the capital markets. I just wanted to comment on that, but that's this thing. But getting back to it, from wherever you are now, to get to that way of thinking, or even having a private investor, everything doesn't have to be the stock market, but to have a private investor, you have to know your story, people. The real story. Because let's say today, I had $5,000 invested in a business. Now I'm trained. Not only am I trained, I'm in this space. So you give me your package, and your package has nothing but glitter and rainbows and unicorns in it. I'm not going to believe it. So I'll tell you that right now. I'm not saying that you're not telling the truth, but I'm saying that you're not telling me the whole story. And it could be because you don't know the whole story. But I'm like, no, we got to talk more. Because how is it that these things will happen with, like, how's it going to happen? Like, what do you know that no one else knows that this is going to happen like that, and not have any problem? You're not going to have any problems whatsoever. And then I might go down and I'll be like, well, how much are you raising? Do you feel like that's enough money to get you through? Be honest. Be honest. So we can only be honest when we know our story. And as I say, the investment thing is not saying people are dishonest. It's that we tend to think that presenting something by presenting all the upside and not talking to any downside, we feel like that's better, or people will be more receptive to it. But just like everything, I think being educated or being in tune is the moral of the story. Knowing the truth, or knowing that the opportunity, or knowing what might happen is better. You have a more informed investor. You have someone that understands, that says, yo, okay, first things first. If you have an investor, the investor has to understand that you are not guaranteeing returns. If you invest in something, you invest in it. You invest in it. it might not work. So you might lose all your money. Not that we're going in. I know people worry about scams and all of that. Every investment that doesn't work is not a scam. Shout outs to Nicole. She just did a presentation on fraud, scams, how to recognize scams. And one of the points we were reviewing her presentation, and one of the points that she definitely made clear was don't invest in something you don't understand.